Uncertainty breeds uncertainty, and that is exactly how I can summarize the current price action. With over 20 days of sideways consolidation, dependency on ETF news, and the lack of volume and volatility in the cryptocurrency space, the direction of Bitcoin is very uncertain. The big question is, when will this current range end and where will Bitcoin go in the macro scale? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. And in today's video, we're going to be going over the macro charts and the short-term charts. One of my most favorite sayings in trading is, when in doubt, zoom out. With the large amount of uncertainty right now, peddled by the dependency on ETF news, the lack of volume and volatility in cryptocurrency, this is probably one of the best things you could be doing in these conditions. So before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure, raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, and of course, news events. You'll get everything you need to stay in the loop of cryptocurrency, Bitcoin, and of course, the relevant economic data. If you're interested in joining our VIP channel, we have our trading channel here. You'll get access to trade signals with exact entries, exact targets, exact stop losses, trade justification, and of course, exclusive analysis. Everything you need to trade the signals effectively and efficiently are posted and provided. Alongside the VIP channel, you also get access to our VIP group chats, our general chat, our trading chart and education chat, our news chat, our trade setup chat, our help chat, and our daily video chat. If you're interested in joining all those channels, contact me in the pinned comment to get more access. Let's go ahead, guys, and jump into today's video. Starting on the market data, how are we currently looking? Volume is sitting at $50 billion. 24-hour liquidations up 41%, sitting at 57 million. And that is due to the fact that we saw a little bit of news come out, and this news was of course some more ETF news. I'm showing you on the chart over here the amount of volatility it kind of stirred up. We saw a pretty strong liquidity grab toward the downside, followed by that news release pushing the price all the way upwards to around 26,000. Of course, 26,000 being a major area of resistance, rejecting that price back downwards. And of course, that news release was no other than another bit of ETF news, and this of course was that the SEC has gone ahead and told everyone that they've actually received another ETF filing. This is going to be for Ethereum, not Bitcoin. This is going to be for Ethereum. So we did see that, of course, have a positive reception in the market, and the market saw a little bit of a rally, but of course it was short-lived as we did see a correction back on the downside. The big question is, when is retail going to learn that the ETF is not even a very good idea for cryptocurrency, right? If you think about cryptocurrency, you think about Bitcoin, what do you think about? What drives the value? And I'm sure we can transact Bitcoin at light speed across the planet. That's awesome. That's fantastic. But as technology develops, that will be integrated in our current financial system. But what does really provide value? Well, we got autonomy. So, you know, individual rights to your money, which is going to be custody, and autonomy, right? Privacy, autonomy. Those are the two main cruxes of what gives Bitcoin its value, really. It's decentralized. You can own it yourself. You can hold it in your cold wallets. And of course, it's completely anonymous. Now, ETFs go ahead and they contest that. They say you don't have to buy Bitcoin on exchanges anymore. You don't have to own Bitcoin. You can just come to our centralized exchange and you can buy an ETF. And it gives you the illusion that you have Bitcoin, but in reality, you don't really own the Bitcoin. And the majority of retail, you might think, well, surely no one's going to fall for that, but the majority of retail, when they start publicizing it, they start pushing it, are going to go through these trusted sources to buy ETFs rather than go through shady, scam-like exchanges, which is perpetuated and pushed in the media to buy real, tangible Bitcoin. If retail stop buying Bitcoin, who gets the market share? You know it, the investment firms, okay? The governments, the banks. If they control the price of the assets and you're just stuck there holding an ETF, your ETF is completely dependent on what they do with the price. So The way I look at it is these ETF news, as the ETF in general, isn't really a very good idea for Bitcoin. I don't think it's a good thing. I think a lot of people are thinking we're going to get a massive pump if we get ETFs released, and they're going to get a lot of money on the short term. But when you really zoom out to the bigger picture, it actually doesn't provide the space a lot of value for, if we're looking at, the key cruxes or the key significant things of importance that Bitcoin provides is value from. And I think this is something we should be talking about more often in the community. Do we really think ETFs are important? Do we think they're going to be a good thing for the long term? Let me know down below, guys, because it actually is quite an important topic. But nevertheless, we'll go ahead and get back into it. So of course, volatility and volume are at record lows right now. We're seeing the volatility index hit lows that we've seen in 2016. It has been pushing up slightly over the last couple of days, but we did see 2016 lows on the 30 and 2016 lows on the 60. Liquidations, we have seen a pretty even split between longs and shorts. Again, this is kind of expected when we do see liquidity grabs, both toward the bottom side and the top side. Both sides of that market generally do get liquidated. Moving over to the DXY, the DXY has actually reached our target, and we've been bullish on the DXY ever since we came down and retested 100. So 2 months in the making, we've finally come up and retested and touched our 105 target. Of course, the DXY now is at resistance, and therefore the probability of rejection increases. We do have to keep in mind, although we are at resistance, we are retesting the resistance from a position of strength, not from a position of weakness. So the probability of a breakup is slightly higher than what we would have in prior scenarios. Okay, this is because we are retesting it in an overall uptrend rather than retesting it in an overall downtrend. So if we do break up over here, that will cause much more pain on the stock market, much more pain on cryptocurrency, and result in higher time frame downtrends. In fact, if a DXY breaks up over here, that is going to be a 1 year long resistance that is going to be breaking toward the top side, and that will actually make the DXY macro bullish. Until then, resistance is resistance until it is not. If we do see a rejection, we are looking for our lower supports, these red boxes, to be our support levels. Of course, if we do see these retracement over here on DXY, that could provide some temporary relief for Bitcoin, some temporary relief for the stock market. Looking at the stock market, we did say we were expecting a lower high over here. We have seen that lower high play out. We've rejected, we've broken down from an uptrending support line, and of course, we're testing / the bottom side of this local range low. We do still expect a continuation downwards to our point of confluence, which is going to be 4,300. That confluence point between that VRPV gap, okay, the horizontal support zone, and the uptrending diagonal support level. Of course, this is a rising channel formation. If we do retest the lower level of the rising channel, we will have 1, 2, 3, 4, 5 retest points. If you know my 5-point rule, a rule that I have developed, you will know that will validate this as a rising channel formation. If we do validate it as a rising channel formation, we can apply a measured move target to the breakdown point. How low could that take us? It could take us all the way back down to our lower range. I'm not saying it's going to happen yet, but if we do break down from this confluence point, that becomes a viable target. So the stock market is in a little bit of trouble if it goes much lower than around 4,300. Of course, if DXY goes upwards, the likelihood of that occurring increases. The same goes for the Dow Jones over here, retesting its uptrending support level. It is looking a little bit more rocky, not as solid as the S&P 500. I think the Dow Jones is likely to correct first and likely to correct a little bit lower. However, we do have a much stronger chunk of support sitting between 34,000 and 33,000. Again, we can see it on the VRPV, a very strong chunk of support. As soon as we start to lose that 33,000 level here, we will expect a continuation lower. Let's go ahead, guys, and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume, they both have extensive liquidity pools and market pairs offering up to 125x leverage, and most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Starting on the macro charts and then jumping into the smaller time frame. And there is a lot to talk about, but really quickly, I do want to go ahead and identify we have been pushing sideways now for just over 20 days. If we take a look at this price range over here, we're over 20 days pretty much on the dot nearly, and we have seen a few larger moves, right? We saw a larger move toward the upside over here. We saw a liquidity grab over here. We've seen some large wicks toward the downside. But if we take a look at every single one of these large moves, every single one of these moves have been caused by ETF news. Every single one of them, okay? Every single one. So if we eliminate these, we can say for sure, we have quite literally been pushing sideways in what I would call a 2% range, but what I would call the tightest sideways compression we have seen for Bitcoin, okay, for over 3 years. This is quite literally the most indecisive we have seen Bitcoin for 3 years. And the reason I say that is when uncertainty rises, okay, dependency on external events rise as well. Okay, I'll say it again. When uncertainty in macro conditions, okay, or market direction rises, dependency rises as well. Now you're probably thinking, what does that mean? Well, we look at the interest rates, we're very uncertain. We look at inflation, we're quite uncertain, okay? We're looking at the ETF news, we're very uncertainty. There's a lot of uncertainty. So when all these macro price drivers become uncertain, the price is likely to move sideways, and then the dependency on the result of these news events start to increase, meaning the price is more likely to be tied to what the news event is going to be or the news release is going to be in terms of price performance. And that causes a situation where we have almost stagnant price action with very low volatility, very low volume, with large explosive liquidity grabs on either side based around or centered around these volatility inducing news events. So again, very awful conditions, very dangerous conditions. If you're trading these conditions, you can go ahead and do so, but just make sure your risk is slightly lower than usual. You know, use your stop losses, use smaller capital position, don't take as many trades. You know, be aware that sometimes as a trader, we have these conditions where you shouldn't be hedging too aggressively into, and this is definitely one of them. But let's go ahead and talk about the high time frame, then we'll come back to a small time frame. So as we said at the start of the video, when in doubt, zoom out. So if we look at the higher time frame, guys, the charts are very much telling us one thing, and that one thing is macro weakness, okay? And two, the macro trend is attempting to flip bearish, okay? We are not quite bearish yet there, but we're attempting to flip bearish. So let's discuss these macro triggers. If we take a look at the weekly chart, we have a few triggers we want to discuss. Number one, the weekly chart bull market support band. We can see the bull market support band represented by this orange band over here. The price is currently underneath the bull market support band, plus we have seen a rejection from the bull market support band. This signifies two things. It signifies, number one, general overall weakness, okay? And it signifies, number two, a downtrend. So we are officially in a weekly downtrend, and we had a confirmation of that rejection. And as we start progressing further and further away, we have increased weakness, okay? Increased bearish strength and increased bearish volatility. So at the moment, we are still at the starting phase of a weekly downtrend. This weekly downtrend has not progressed into a monthly downtrend, but it is still at risk of doing so. The Gaussian channel is going to be our second one. If we take a look at the Gaussian channel, this as well is expressing quite a fair bit of weakness. We saw on the Gaussian channel, the weekly trend flip bullish. The weekly trend flipped bullish on the Gaussian channel when we broke into the Gaussian channel from the bottom side up. We saw the weekly trend flip into strength. Okay, this is when we had weekly strength. This was incredibly bullish. This was actually representing a macro shift in direction, okay? A macro uptrend according to the Gaussian channel. However, that level was lost when we broke back into it, signifying again a shift into a weekly downtrend. So we are now currently in a weekly downtrend. The main trigger for a monthly downtrend is going to be the Gaussian channel midline. The Gaussian channel midline sits at 24.4K. 24.4K lines up perfectly with the lower part of the support at 25.2 to 24.4. So a very key level of support. In fact, this is a 460-day long support level. The 24.4K Gaussian channel midline sits right at the bottom at 24.4K. If we see a breakdown of 24.4K, the probability of a continuation through the Gaussian channel, and by through it, I mean a break of the lower band of the Gaussian channel, significantly increases. If that occurs, that will take us sub $20,000. So we are definitely watching out for that. So now you can see how this weakness is developing and potentially runs a risk of a further correction. None of this is validated or confirmed as of right now. We still do have a chance for the bulls. We're discussing that in a second. If we take a look at the 50 EMA and the smaller time frame moving averages, we can see the prices underneath the small time frame moving average, which is going to be 15, 17, 22, 26, 28, 32, and of course the 4 moving average. And we can see the prices also below the 50, which is going to be the red line. The price is very close to these moving averages, which represents volatility is very, very low. So although we have had a shift in overall strength, okay, in direction, the volatility is very low, and we do know these moving averages are based on volatility. The greater the distance between the price action and the 50 represents increased or higher amounts of volatility. With higher amounts of volatility or increasing, okay, progressively increasing volatility, we have a stronger trend. So right now we are in a weekly downtrend, but it isn't a very strong weekly downtrend. Moving back over to this chart here, there is another indicator we do want to bring up, which is going to be our Ichimoku cloud. And we can see on the 3-day chart specifically, now the Ichimoku cloud as well is in a very delicate, well, an incredibly delicate position actually, and this is going to be the retest of the leading span at the bottom, which is going to be the lower line of the Ichimoku cloud. For those of you who don't know what the Ichimoku cloud is, it is a overall indicator that represents macro strength, just like many other does, in terms of volatility and more importantly in terms of momentum. What we can see is two things. The price action is retesting a lower span, and the lagging span, okay, which is going to be this green line over here, is almost breaking into the channel. When the lagging span breaks into the channel, okay, which is going to be the cloud over here, that will represent a negative shift in momentum, okay? That will be very, very bearish. That will signify a likely continuation downwards. Now, if the price happens to break below this cloud, we are very likely to continue downwards. If we take a look at the prior times this has occurred, we have seen every time we break below the clouds, while the lagging span actually pushes within the clouds or below the clouds, okay, we generally see a continuation lower. So this is going to be a last leg of support basically for Bitcoin over here at 25.2, 25.4, and if lost, we are very likely to see a continuation down. So now you have seen why the macro charts are looking very grim. We are not quite macro bearish, but we are weekly bearish, we are daily bearish, and we are developing into this macro bearish territory. So what will happen if we lose 24.4K? If we lose 24.4K, we are essentially deleting the range of support that we have been above ever since March 20, or should I say March 12th, 2023, this cluster of price action over here. If we drop below it, we will be then continuing toward the downside. Our targets are 22.5, 20,000, and of course 18,000 if we do break through here. If we take a look at the current range, we have a head and shoulder pattern. If we take the measured move from the top of the head, apply it to the neckline breakdown, that actually takes us right to $19,100. If we take a look at $19,100, that is going to be that VRPV spike right over here, indicative of a very, very strong support, retesting this low area right over here. That would be the worst case scenario for Bitcoin, and for that to play out, Bitcoin will need to lose 24.4, including flip bearish on the midline of the Gaussian channel and lose the 3-day Ichimoku cloud. All of those bearish things will have to develop for Bitcoin to continue lower. But all hope is not lost for the bulls. If the bulls are able to get the price back above 28,000, that will cause this uptrend to continue. They will need to, of course, flip momentum positive, okay? Meaning they are going to have to get the momentum above this trend line over here. They're going to need to cause a positive momentum flip, okay? And with that, they will also need to flip this downtrending diagonal resistance. So if we take a look at where the bulls can really take control, that is still going to be that confluence point at about $28,000. The big question is, how can the bulls get the price above $28,000? Let's go ahead and answer that now. If we take a look at the price action, for the bulls to get the price back in control, $28,000 is going to be that key trigger point. And I've gone ahead and made this one green over here. If we take a look at the resistances above here, we have our $26,000 resistance. We have $26,300 resistance. Our $27,000 resistance, and we have our 27.5 to 27.75 resistance. That is going to be 5 points of resistance the price will need to break above before the bulls can reclaim control on the weekly chart. So you're seeing now why the probabilities of a continuation down is so much greater, just because of how much ground the bulls need to reclaim and how significant these levels of resistance actually are, / how challenging they are going to be to break. So if we want to see a continuation down, guys, we are still expecting a continuation in to 25.2 to 24.4. This is going to be essentially the last line of defense. If this level is lost, the price will continue much, much lower. If the bulls want to reclaim control, on the short term, they need to get the price above $26,000, okay? So $26,000 being the first level of resistance, but also the POC level on the chart, this red line. If the price can get above $26,000, that will push the price into a resistance of 26.3, where we will either again reject from and push back down to the range low, or break up and probably retest 27K, okay? If that occurs, we'll discuss again in another video. If we take a look at the technical indicators over here, we have our momentum, we have our CVD, and of course, we have our open interest. Everything of these indicators are suggesting indecision, sideways consolidation, and a near 50-50 chance of either way direction, okay? If we take a look at the indicators, they are really not telling us much, because these momentum indicators particularly, okay, and these volume indicators particularly, the volume delta indicators, are very reliant on volatility. They're very reliant on volatility. So we see sideways price action, indecision, these indicators become a little useless, to be honest, a little bit useless. And as a momentum trader, that pains me to say, because all my trading is done on volatility and momentum, so I'm having a very hard time finding opportunity in this basically inexistent, indecisive and sideways market. But keep pushing forward. These times don't last very long. Volatility will come back, directional moves will come up, clarity will come back, just as the market ebbs and flows. Thanks for watching. Hope you have a great day. I'll catch you guys in the next one. Before I go, check out the Crypto Academy, guys. It's just 4th or 5th link down below. It's a 10-unit course we've created to teach you guys how to trade. It's an introductory course to technical analysis. If you're interested in learning the essence of what we do on this channel, that is where you'll learn it. Thanks for watching. See you guys in the next one. Have a great day.